and that's where, Paul Renault has been saying this. He's been talking about this for a while, is that CSL is starting to move to cost out. From my perspective, I've always been, and I put my hand up very strongly, I actually believe that CSL is probably the greatest company Australia's produced in the last 3 decades. And I think that needs to be very, very clear, is that what it is, how it's become, its position globally is astounding. So I do declare my hand on that. However, what I've started to find disappointing over particularly the last 2 years, when you'd think it would be a time to really go at it, is the cost out's also coming out in R&D. Part of the reason CSL has got to the position it is the reinvestment in itself, and not just, piecemeal bits and pieces. We are talking serious money that it's held away from shareholders, correctly so, and put it back into itself. And you just have to look at the Behring division and the diversification of its immunoglobulin business, its albumin business, going from, a handful of products up to 20 in both. For what realistically is you can't call it a commodity, because they have actually divided it. They've improved it. They're in the spaces that matter. So that, for me, is the slight disappointment about CSL over the last 2 years. But you cannot get away from how CSL is now developing, which is that it's going into its new spaces. Its acquisition is perfect because of its position in Switzerland already. So the grabbing of a larger slice of the Swiss market is perfect because of its placement. Its main manufacturing hub outside of Melbourne is Bern, and that is all part of the acquisition that CSL has got. It will continue to be an absolute powerhouse in its space, and having, as you said, Nadine, it jumped 7.5% on its earnings is fairly stereotypical. If you go back and look at the February and August of the last 6 years, you can see big spikes in either direction, and you always know that it's CSL's results. And this is a big beat. I know you've got the RBC numbers, but if you look at the consensus, they have beaten consensus persistently across the numbers that people will matter at, so EPS, underlying NPAT, gross profit margins, by about 3 to 5% across the consensus. So the market will like it. It's just a question now of where CSL next part is, and it's clearly M&A rather than going through the research and development.
So still only at $258, let's call it that, down from 336 at its high. Is it a buy? If you think that it's one of the best companies Australia's ever produced, I'm going to presume you'll say yes.
So you asked me this almost exact question in reverse with regards to CBA last week or the week before. So it is a brilliant company, and I, again, declare that I've got it. So I need to put that out there. Is it a buy right this second? It's a question of whether or not you want to pay for the premium. And that's what you're asking me, really, is the premium worth it? Time and time again, it's shown you it is. Does it get back to $330 a share sometime in the future? Probably. When? Don't know. And I think that also needs to be very clear in the current world that Paul Perreault is working through, is that my concern in the short term, and I'm talking 12 months, and if I was going to CSL, I'd be looking at CSL as a 10-year prospect in terms of where I think about it. There is possibilities of more M&A. There is possibilities of trying to grow that way. Markets therefore suggest that might mean tapping for equity or debt, and that therefore may pay some volatility. And I would be okay with that. So I know I haven't answered your question directly in terms of what that is. I am very much a believer in the story. I'm very much invested in it. Right here and now, it's more of an add to me rather than an initial investment.